ImmuCell, ticker ICCC, well, they just smashed Q2 consensus estimates. Revenue came in at $7.19 million, which beats the $5.4 million estimate, up 11.5% year over year. And EPS hit $12.20, just absolutely crushing the $1.05 estimate.
Right. And on the guidance front, even though there was no formal numerical guidance, management did reiterate their target to produce, 1 million more units in 2026. But despite those massive top and bottom line beats, the stock actually slid over 8% down to $9.98 right after the report.
Exactly. So for this deep dive, we really need to figure out why. I mean, why would the stock drop on a double beat? Well, you don't have to look far. It points directly to severe margin compression.
Yeah, gross margin just plunged. It fell sharply to 33.9% from 43.7% a year ago. That is an 11.1 percentage point sequential drop just from Q1.
Wow, that is massive.
It really is. And the drivers are, well, pretty clear. There is a 7.5-point drag from a planned lower manufacturing output.
Right, so because they were producing less, all those fixed costs just had to be spread over fewer units.
Exactly. Then you add in a $150,000 purchased material scrap issue, and you lose another 2.1 points.
Jeez. And then there's the retained facility cost shift, which dragged margins down another 1.9 points. They discontinued that program, but those facility costs are just shifted into cost of goods sold.
Right, the costs then just vanish.
Yeah, it's basically like paying rent on an empty apartment, but having to deduct it from your other investments. It really makes you wonder if these margin hits are just temporary operational hiccups or, systemic flaws.
Well, it is a heavy drag right now, but segment performance did show some serious underlying strength. Domestic sales actually surged 27.7% to $6.2 million.
True, but international sales sank 38.9% down to roughly $1 million.
Yeah, but we really have to contextualize that international drop. It is largely just order timing normalizing. Last year, in 2025, they had a massive surge in Canada, clearing out back orders, so the demand is still there.
Fair enough. But we have to talk about the massive caveat to that EPS beat we mentioned. The $1.8 million net income was heavily inflated by a one-time $2 million legal settlement from a former retained contract manufacturer.
Yeah, that bottom line anomaly definitely makes the balance sheet look artificially healthy. But management's commentary shows they are laser-focused on the First Defense calf scours line. And it's working. They actually grew their share of U.S.-treated calves from 15% to 19%.
And to capitalize on that, they announced an $8 million two-phase capacity expansion to triple output by late 2027. But how are they funding this, and what risks should you be watching?
Well, they're funding it with cash on hand, which is currently at $8.9 million.
Wait, really? Funding an $8 million project when you only have $8.9 million in the bank?
Yeah, it leaves almost zero margin for error, especially with their severe customer concentration. Just 2 customers make up 66% of their first half sales.
That is wild.
Right. Plus, they are facing rising competition and increasing costs for colostrum supply.
Right, so I want to leave you with a final thought. The value of a day-old calf has actually soared from $400 to $1,700 recently.
Oh, wow. Yeah.
So the economic case for ImmuCell's preventative treatment is stronger than ever. Will their margin sacrifices today secure market dominance tomorrow?
That is the defining tension right now. Keep an eye on it and be sure to follow the show for your daily earnings coverage.